All right, I want to talk about some of the dangers of forming an LLC yourself online or through your state's website. My name is Rocco Koza. I'm the founder of the Koza Law Group. We are a business law firm here in Pittsburgh, Pennsylvania. We are licensed in Pennsylvania, New York, West Virginia, Florida, and Tennessee. And we deal with clients from startups to large Fortune 500s. And a lot of the startup clients we deal with, and in the 20 years I've been practicing law, this issue comes up quite a bit. A lot of people think they can form the LLC online themselves. It's a lot cheaper, it's a lot easier, and they're getting adequate protection. And I will tell you this, that is in most instances not the case. In LLC, I'll use Pennsylvania as an example. So if you're forming an LLC in Pennsylvania, the first step is filing your certificate of organization with the state of Pennsylvania. That's the easy part. I always say that my 13-year-old daughter could do that. It's filling out a form, it's putting in some information, and submitting it online to the state. That's the easy part. That's organizing your LLC with the state, but that's not giving you any of the protections or potential tax benefits an LLC gives you. The second part of an LLC, and actually the most important document, is the operating agreement. That is the governance document of the LLC. Like a corporation has bylaws, an LLC has an operating agreement. And if you try and do that yourself or get one of the ones from one of those online websites, I will tell you this, it will be wholly lacking. I can't tell you how many times over the years that I've dealt with clients that have come in, they maybe formed an LLC through a self-help website, maybe they did it themselves and found an operating agreement online, or maybe even their accountant or CPA said they would form their LLC for them and never gave them an operating agreement. All of those scenarios can spell big trouble. And I'll give you a couple reasons why. Let's start with if you are a single member LLC. Your operating agreement should have a couple very important provisions within it. The first one is your limitation of liability provision. That provision should say that the members of the LLC, which is the owners, are not liable for debts of the business. Outside of having that language in there, you could potentially be liable for debts of the business, and the whole point of setting up an LLC is to create this separation between you and the business. So that's one provision that should be in there that a lot of times is lacking in these agreements. The second provision is your indemnification provision. Indemnification basically means that the company will cover the defense of you, the individual owner, if you are sued for doing something on behalf of the company. And the reason why this is important is if, say, you have insurance on your business, and something's happening, or you're driving to a job site and maybe you get into a car wreck and you think that the company should cover the defense, and you get sued because you caused an accident and someone sues you and you think the company should cover that because you were on company business in a company car, etc. If your operating agreement doesn't say that the company will indemnify you, the individual owner, for that claim, your insurance may not cover the claim. Now, it's not guaranteed that they won't, but a lot of insurance companies will ask for that operating agreement to make sure that indemnification language is in there. Without that language, your insurance that you purchased for your business may not cover the lawsuit against you individually. It'll cover the suit against the company, but it may not cover the suit against the individual. And a lot of times attorneys will name the company and the individual owners as separate parties within a lawsuit. That's why that indemnification provision is extremely important. The last provision that's extremely important in these situations is having S corporation language. Now, if you're a single member LLC, by default, you're taxed as a sole proprietorship, meaning your income minus your expenses is your profit. You're gonna pay ordinary income tax and self-employment tax on that full amount on your Schedule C of your federal tax return. If you make an S Corp election, you're basically telling the IRS you wanna be taxed differently. And say you're gonna have $100,000 in profit this year. Without making that election, you're gonna pay ordinary income tax plus 15.3% self-employment tax on that 100 grand. So that's 15,000 in taxes roughly. If you make an S corporation election, the way the rule works is you have to pay yourself a reasonable salary. So in that instance, maybe you're going to pay yourself a $50,000 salary, but the remaining $50,000 left of that profit is paid as a distribution and it's not subject to self-employment tax. So that has the potential to save you thousands of dollars in taxes. Now, your operating agreement should have language within it that states the company is permitted to make this S corporation election. Without that, and maybe someday you get audited, the IRS could potentially, and it's not certain, but they could potentially disallow that election because the company is not permitted to do that. I've actually seen operating agreements that people have brought in that they got online somewhere that specifically state the company is not authorized to make a taxation election of that as an S corporation. So it's basically saying within that operating agreement, the company is not allowed to make an S corporation election, but they go ahead and do it. If they got audited, the IRS could disallow that and you could potentially be paying back taxes and penalties. So those are, as a single member LLC, important provisions to have. Now, if you have partners, this is where it gets even crazier. If you have partners in a business, you've got to think through scenarios, the D's, we call them: death, divorce, disability, and disagreement. How do you address these things? Your operating agreement should talk to those. A lot of the operating agreements I've seen from the online services or the ones people just find on the internet somewhere don't address any of these things. These are called buy-sell provisions. They should be within your operating agreement to discuss what happens if the partners disagree. How do we get someone out? How do we buy someone out? Can we force someone out? What happens if someone dies or becomes disabled or gets divorced? What happens? These are provisions that should be in these agreements. And as a partnership LLC or a multi-member LLC, you have to think through these, because if you don't, you'll spend tens of thousands of dollars trying to resolve the issue down the road. I can think of many clients we've dealt with that had really terrible operating agreements. They never fixed them. There's a partnership dispute. They come to us to help resolve that, and because the operating agreement doesn't speak to any of this, it becomes basically a negotiation. And those negotiations can take time and lots of money. So what I would encourage people is, look, forming an LLC with a lawyer is not as expensive as you think. We do most of our LLCs on a flat fee basis. Would you rather spend a few $100 more up front to make sure it's done right and specific to your business and the people within that business? Or are you trying to save a few $100 up front, do it yourself online, and then spend potentially tens of thousands of dollars down the road when something happens? And I will guarantee you at some point something will happen. It's inevitable in business. I always like to tell people, and it sounds a little bit harsh, but don't be penny wise and pound foolish. If you're not ready to spend a few $100 extra to make sure your LLC is done correctly up front, that's the foundation of your business. If you're building a house, think of that. That's the foundation of the house. You would think you would want it done correctly. And if you're not willing to spend those few $100 extra, are you ready to start a business? These are things you need to think through. And I'm just speaking from experience. I've seen too many people try and do it themselves to save money, and it's cost them tens of thousands of dollars to resolve the problems down the road that could have been taken care of by working with a lawyer up front. So if you're getting into business, if you're thinking about starting a company with either yourself or with partners, at least talk to a lawyer up front, see what it's going to cost, and make that determination. Because I will tell you, it will be worth it. You will feel adequately protected. It will give you a sense of peace. That's our job as lawyers. Our job is to give you a sense of peace that it's done correctly. Your foundation is strong. It's built the right way. There's no way to guarantee 100% it'll never be broken or there will never be problems. But we've done this for so long and have so many clients, we can anticipate 99.9% of the problems and make sure they're covered within that operating agreement. So my advice to you is, if you're thinking about starting a business this year, before you go ahead and do it online yourself or have your CPA do it or go to one of those websites, just reach out to someone, talk to a lawyer, see what they charge, find someone you're comfortable working with. Because yeah, maybe a couple $100 more, but you'll know it's done right. You'll know you're protected, and then you'll have a lawyer to reach out to when things go sideways, which they always tend to do in business. So I hope this video shed some light on some things, maybe gave you some education, provided you some value. If it did, definitely give it a thumbs up. I'd love if you subscribe to the channel and stay tuned for plenty more videos like this. Thank you, everyone.